There is a reason why most of the world's great fundamental, long-term investors look closely at ROIC. It's a critical aspect of what makes companies grow, and grow profitably over time. It's what makes businesses appreciate, and what drives stock prices up. Simply put, ROIC analysis is a must-have tool in your equity investor toolbox. But are you confused by what exactly return on invested capital means? Do you struggle to decipher the jargon, the calculations, the accounting, the economic principles, and how to apply all of it to individual companies? Are you able to actually use return on invested capital analysis in your day-to-day investment analysis? And do you have a place for it in your investing philosophy framework? In other words, have you connected the dots between practice and the ROIC theory you have read about in many of the great investing and valuation books? That's why we created the Margin of Maybe blog series, to demystify how ROIC is calculated and used, and to apply it to actual stocks in the real world, which is the best way to learn, through repetition. We'll work through capital productivity analysis questions that we encounter and explore different approaches to answering them. You'll get all the reps, knowledge, and tools that you need, and we'll share ideas and learn together by doing. Visit the Margin of Maybe blog now and take the first step towards mastering ROIC.